members, Nottinghamshire Pension Fund Committee. I'm, of course, James Campbell, Chair of the Nottinghamshire Pension Fund. Right, I want to welcome, we've got a new elected member, so Councillor Harry on. Harry's replaced Roger Jackson, so welcome, Harry. We've also want to thank members for attending a working party training, which included officers from LGPS Central and elected members, and that's on changes to how investments will be managed, which is arising from the Fit to the Future programme. And also we had a fantastic property tour that was organised by Aberdeen. So I just want to thank Aberdeen, although they're not here, but also those elected members that went. It was a really productive tour to look at those assets. Also going to thank, even though they're not here yet, but they will be later on, Avon and LGPS Central, because they're going to be coming over to do a presentation. And of course, I want to thank LGPS Central for coming last month, because they did a presentation in that really long November committee meeting that we all attended. So well done for those who attended the meeting in November. And okay, right, so to all elected members, officers, pensioner reps, trade union colleagues and advisors of the Nottinghamshire Pension Fund Committee, I extend you a very special warm welcome. Your contributions and perspectives, as always, will be invaluable, so please do ask questions. Just a kindly reminder that this committee meeting is being broadcast live on YouTube, so viewers can hear the presentation and questions of today's meeting. Now, as always, we're going to do a round robin. So I'd like all members, officers, representatives, basically anybody who's present here in the room today, to introduce themselves, and we'll start off with.
Thank you. Thank you, Chair. I'm Don Monahan, Advanced Democratic Services Officer.
I'm Councillor Andy Ederdine. I'm the representative from Russia Borough Council, representing all the boroughs and districts.
Hello, my name is Darryl Paul. I'm also a representative from the districts and boroughs, and I hail from Bassett.
Hello, I'm Ian Timms. I'm the pensioners representative.
I'm Councillor Chapman. I represent the City Council. I'm John Cockcroft. I represent the GMB union.
Right, William Bourne. I'm the independent advisor to the fund.
Tamsin Rabbits, Head of Pension Fund Investments. Sarah Stevenson, Group Manager, Business Services Centre, responsible for pension administration.
Claire Thomas, Technical and Regulations Manager for the Pensions Office.
Kieran Guilfoyle, Investments Officer in the investments team.
Good morning, Stephen Pearson, County Councillor for the Bingham East Division.
Stuart Bestwick, County Councillor for the Newstead Division.
Good morning, everyone. I'm Councillor for West Bridgeford West.
Well, everybody, James Rawson, County Council for Kimberley and Nottingham.
Well, everybody, Stuart Matthews, Nottingham County Council, Leek and Warrington.
I'm Gert Bingham, Councillor for Worksop West.
County Council Marion, sir, and I represent Mansfield West.
Good morning, all. My name is Councillor Patrick. I'm representing Mansfield South Division and currently Vice Chair of the Pension Fund. Thank you.
Good morning, Nigel Stevenson. I'm the Director of Finance here at Captions.
Thank you. And over there.
I'm Ashley Booker, Senior Media Officer at Nottinghamshire County Council. Nottinghamshire County Council England.
Thank you, Ashley. And over there.
Jo Tooney, Pension Fund Governance Officer.
Brilliant. So we've literally covered everybody. And as I say, we're going to have two. We're going to have LGPS Central coming later on, as well as Avon. So, members and officers, before we begin the meeting, although we've got no members of the public, I'm going to say a statement anyway, that members of the public that are present, that placards, banners, advertising materials and similar items are not permitted in any committee meeting and must be covered or removed. Failure to comply may result in that member of the public being asked to leave the meeting. Members of the public should remain seated during any debate and not do anything to endanger the health and safety of any person. Members of the public may record proceedings and report all public meetings. However, any person recording must not distract the good order of the meeting, and please turn mobile phones off, that's for everybody, and any other electrical devices that we may have, please switch them to silent. Thank you very much. Right, so we've got, on this agenda, we've only got 12 items. I think at the last meeting we had 18 items, so we've had the very long session, and I think we may finish today by about 1 p.m, but let's wait and see. Okay, right, so let's move over to agenda item number 1. Number 1 is minutes of the last meeting that were held on 13th of November 2025. Committee members, can the minutes from our November meeting be approved? May we take a show of hands, please? Okay, lovely. That's agreed. That's been approved. So, right, let's move to agenda item number 2. That is, of course, apologies for absence. And that's over to you, Doc.
Thank you, Chair. Councillor John Clark sends apologies under the category Other Reasons. We also have apologies from Christine, Pensions representative. Thank you.
Okay, thank you kindly, Dom. Those apologies have been noted. So now we quickly move over to agenda item number 3, which is declarations of interest by members and officers. Does any councillor or officer of this pension committee have any declarations of interest to make? That's a no. Lovely, thank you. So we now move over to agenda item number 4. That is, of course, the, if you look on the agenda, Nottinghamshire Pension Fund investment management fees. Before I hand over to Tamsin Rabbit, who's our investment manager, to do the report, I'd like to move the recommendation on page 14 of the agenda pack. So you've got the agenda pack in front of you. And page 14, for a reminder, it is that the recommendation that the Nottinghamshire Pension Fund Committee notes the contents of the report. I'm going to ask for a seconder. Thank you, Councillor Vice Chowdhury. And now over to you, Tamsin. Thank you.
Thank you, Chair. The committee requested a report on investment management fees, recognising the impact that fees have on the returns to the pension fund. Despite this impact, it would be unwise to focus only on fees, as it is the risk-adjusted net returns which matter to the pension fund. The report explains the services provided by investment managers and how both the fund and LGPS Central, on behalf of partner funds, look to negotiate lower fees. The report further explains the difference between direct fees and embedded fees and how these are reported in the annual accounts. Finally, the report provides a comparison with the average investment management fee rate paid by LGPS funds. This comes with caveats, as fees will vary depending on fund size, asset mix, and mandate complexity. The Nottinghamshire Pension Fund is 36% cheaper than the average LGPS fund in investment management costs as a proportion of investments. Thank you, Chair.
Thank you, Tamsin, for giving your reports. Do any committee members wish to speak on agenda item number 4? Please, okay. Okay, Neil, go to you first, so Councillor Neil Timms. Thank you.
Not technically a question about fees, but what about commissions? Because the fund managers don't only make their fees, they also charge commissions on trades, unless I'm wrong. And I know that they also get some course on commissioning requirements. Do you still pay for that as well?
I think, Neil, you're talking about the embedded fees, will be included in that. Yeah. All of those costs will be included in those embedded costs, which include training actions.
Okay.
Okay, thank you. And got a question from Councillor Chapman.
I've always been sceptical about spending too much energy on fees because they're a marginal cost in terms of
returns we get. Having said that, what I thought the most important thing is what rate of return we're getting from the management, as opposed to passive investment. I mean, that is the indicator I'm really interested in, not volume, or even comparisons with other fees. So, what rate of return are we getting from management compared, and it would have to be notional, with if it were managed passively? That for me is the indicator. And then, once we saw that, we could then look at the marginal costs. So that's what I'm there.
Thank you, Councillor Chapman. Over to you, Tamsin. Thank you.
I would say that is exactly the right thing to be looking at, and we have the valuation report, later on in the meeting.
And you will give us some indication.
I mean, they're already in the report. If you want more detail than is in the report, we can discuss that as well.
Sorry for the conversation.
Yeah.
Are there any comparators with other organisations, or are you going to use the
sorry.
Or are you going to use the benchmark comparison?
We compare to benchmarks in that report. If what you're asking is how does our performance compare to other pension funds?
The two things I'm looking at, how does it compare with the pension funds? And then how would it compare with notional passive management?
I would say that the comparison with the passive, with investing passively is effectively the same as comparing with the benchmark.
Okay.
Where there is a passive fund equivalent, because not all investments have the equivalent to that.
Okay, so the benchmark includes passive management. Right, got it.
Okay.
Right, but I've got to do a lot of work to work that out, haven't I? So I've got to cross. I mean, what I'll be looking for is a standard report, extracting all that in a very clear way.
Okay.
Sorry.
When we start looking at the performance report,
yeah.
Should we have a look at it then, and then we've got the right numbers in front of us?
The answer I would like. Thank you.
Thank you. That's explained that. Thank you. Councillor Dalrymple, you have your hand up there.
Thank you, Chair. This is a separate item, the performance of the fund and the valuations. I think it's important that we do know how much our fees are. And I think the fact we're below average is testament to the engagement that the committee and officers had with fund managers, because that dialogue enables us to have a close relationship and also enables us to get a fee which is beneficial to the fund. So I think it's good news report. I welcome it. Obviously, the points have been raised. We look at it later item on the agenda. But I think we should, take credit for what's happened, and the officers and the members who have been involved in this would also take credit for what's happened.
Thank you, Councillor Dalrymple. Yes, officers have done extremely well looking at the investment funds, and I know a number of elected members are pleased with that. So thank you, Councillor Falk, for raising that. I've just got one question. I suppose it's more for the general public rather than elected members, because we've got members of the general public watching. My question is, how frequently Tamsin do officers review fee structures, and are there upcoming opportunities for renegotiation? I know we're doing this ongoing, but how often do you monitor fee structures within the pension fund? Thank you.
I think there's probably two elements to that. I mean, these things are always under review. So if anything came to my attention that might indicate it was a good opportunity, then that's a conversation that would be had at that time. If there are issues with any of the investment managers, that also provides specific opportunities to have conversations about, please.
Okay. Thank you, Tamsin. So a couple of months ago, we said that we'd made savings of 735,000 through looking at renegotiating fees. We're now on over 900,000. So that is all due credit for the investment fund officers that we've got here at the pension fund. So thank you very much. Have we got any more questions on agenda item number 4? Okay, we've just had, so I'm just going to welcome Everton Lewis Gordon, trade union rep, who's just arrived at the meeting. So welcome Everton. So right, we now move, right, so number 4, let me just sum up. The Nottinghamshire Pension Fund Committee notes the contents of the report. The recommendation for the report is for noting, so we'll now move on to the next agenda item. Thank you. Which is agenda item number 5. We're moving through the agenda items pretty quickly. So agenda item number 5 is the Pension Fund Treasury Management Mid-Year Report 2025-2026. And before I hand over to Kieran Guilfoyle to introduce that report, I would like to move the recommendation on page 17 of the agenda pack. And just a reminder of that recommendation that the Pension Fund Committee members endorse the actions taken by Section 151, Section 151 officer to date, that's Nigel sat next to me, as set out in the report. And I'm going to ask for a seconder.
A seconder, Chairman.
Thank you, Councillor Chowdhury. And now I'm kindly going to hand over to Kieran Guilfoyle. Over to you, Kieran. Thank you.
Thank you, Chair. The term Treasury Management refers in this report to the management of cash deposits as opposed to the pension fund's long-term strategic investments. Treasury management activity is undertaken by the investments team and overseen by the Council's Treasury Management Group. The Pension Fund Committee has responsibility for setting the Treasury Management strategy each year and receives 2 performance reports during the year. And this is the mid-year report showing performance to the end of September 2025. The main items to note are that all Treasury management activities undertaken were within the limits set by the 2025-26 Treasury Management Strategy. Cash balances are shown in paragraph 9, and these are required to cover the various investment commitments, also shown in paragraph 9. And over the 6-month period to September, the fund earned an average of 4.29% on its deposits, compared with our benchmark rate of 4.06%. Thank you, Chair.
Thank you very much, Kieran. Have we got any elected members here who wish to ask any questions? Thank you. Okay, that's no. Right, so to sum up, that the Pension Fund Committee members endorse the actions taken by Section 151 officers as set out in the report. We're going to move for a vote on this one. Those for, can you show your hands? Okay, that's unanimous and that's carried. Thank you very much. So we now move over to agenda item number 6, which is the consultation report, local government pension scheme in England and Wales, scheme improvements, access and protections. And we're going to have Sarah Stevenson, who's going to introduce the report. But again, before I move the recommendation, on page 22 of the agenda pack, kind reminder, so the recommendation on page 22 is 2 items. Number 1, that the Nottinghamshire Pension Fund Committee approves Appendix A, the submission as Nottinghamshire Pension Fund's response to the LGPS, England and Wales Scheme Improvements, Access and Protections. That's number 1. And number 2, that the Nottinghamshire Pension Fund Committee delegates the incorporation of any additional technical comments, reiterating points raised by the local government association or large actuarial firms to the group manager, business services centre, in consultation with the chair of the committee. So we've got 2 items there. I'm going to ask now for a seconder.
I second this, Chairman. Item 6. Thank you.
Thank you very much, Councillor Chowdhury. Now over to Sarah Stevenson. Thank you very much.
Thank you, Chair. So as introduced by Chair, this report asks committee to approve a response which is attached to Appendix A to the consultation regarding access and protections. It also asks the committee to agree for officers to include any further technical comments. So in October, government published a consultation for scheme improvements regarding access and protections. The deadline for submission of our consultation response is the 22nd of December. As per the report, the consultation sets out the government's proposals across 4 key policy areas. These are amending the normal minimum pension age to reflect legislative changes, simplifying the process for applications for directions, applying new dinner protections to outsourced workers, and bringing pension fund access to mayors and councillors in England in line with Scotland, Wales and Northern Ireland. A summary of the proposals are detailed within the report, and the attached Appendix A details in more detail the actual 4 key policy areas and the proposed response to the key questions. Thank you.
Okay, thank you very much, Sarah. Have we got any committee members or elected members, trade union reps, pensioner reps who've got any questions for this? Right, hand straight up there, Councillor Stephen Pearson. Thank you. Sorry.
Thank you very much, Chair. I'm just looking at page 38 and 39 of the report, and as I understand it going forward, where a council have an outsourcing situation, where currently they can provide either what's called a broadly comparable scheme, which frankly not many firms can manage because the LGPS is such a comprehensive scheme, or they could join LGPS. And I think the change is generally something to be supported. But what my concern is that generally, frankly, is a knee-jerk reaction. Often local authorities will insist on a bond being obtained by the employer. And it can be difficult for some firms to obtain a bond because banks can be quite difficult about issuing them. I just wonder whether either that can be investigated further, or whether in the response we could say something to the effect of, while we support the proposals, we wouldn't want them to go forward in such a way that there was a requirement for a bond in every case, which might make it difficult for an organisation to go forward with an outsourcing proposal, and that other ways of getting assurance, because obviously the scheme needs to know the contributions are going to be paid. Some of the sort of assurance could be obtained in terms of the ability of the employer to pay the pension contributions.
Thank you, Councillor Pearson. Very good question. Over to you, Sarah. Thank you.
Thank you to Councillor Pearson for early insight of the question as well. I think obviously there's a lot of detail that we would need to consider there. What I propose we do is we actually take that question away. We speak to Andy Durrant, who is the employer support and compliance lead for the fund, who actually manages bonds and guarantees, and actually get a written response back to you on that specific question.
That's fine, thank you.
Okay, thank you. Excellent response. We've got a question from pensioner representative Neil Timms. Thank you.
Page 26, category 2. Oh, sorry. Page 26, category 2, PPA for transferring a pension arrangement. I'm assuming, well, it's not explicit, I'm assuming this would not apply to members who transferred between local government pension funds to schemes, i.e. if an employee was to join Nottinghamshire, Derbyshire, for example, would they carry those protections that they got in Derbyshire to Nottinghamshire? It's still in the scheme, basically.
Thank you. Neil's asked a question there about protections. Sarah?
Yeah, I'm going to defer that question to Claire as the tech and regs expert.
Thank you. It seems to be saying that it will be other public sector schemes rather than local government schemes. So if they had service at Derbyshire, but they aggregate it with their service with Nottinghamshire, then that protection will carry through because it is one scheme It's not defined.
So they'll still be able to retire at 54.
That's my understanding.
Okay.
Okay, thank you, Claire, and thank you, Neil. Have we got any more questions on those two items? Okay, right, so we've got no more questions. So just going to sum up. So there's two items. I'm just going to repeat that. Item 1, that the Nottinghamshire Pension Fund Committee approves Appendix A, the submission as the Nottinghamshire Pension Fund's response to the LGPS England Wales scheme improvements. And number 2, of course, was the Nottinghamshire Pension Fund Committee delegates the incorporation of any additional technical comments, reiterating points raised by local government association. So we're going to take a vote on this one. Can I have a show of hands for? Okay, again, that's unanimous. Thank you very much, members. So we now move over to agenda number 7, and that's, as always, our independent advisors report. Our independent advisor is William Bourne, who will introduce the report. But before I do so, it's in page 58 of your agenda pack. And a kindly reminder of that recommendation that the report of our advisor William Bourne, that the report that is noted for Nottinghamshire Pension Fund Committee. I'm going to need a seconder. Can I ask for a seconder?
I seconded this item number 7, Chair. Thank you.
Thank you very much, Councillor Chowdhury, and it's over to William Bourne. Thank you.
Good. Thank you very much, Chair. There's not been a lot of change since last time I spoke to you. Note the US, you may have seen the US did cut rates overnight. And also I made a mention in paragraph 11 that repo rates were being a bit volatile. And these are a kind of intricate part of the US financial system. The Fed has actually been buying back short-term bonds to try and support repo markets. And it all sounds horribly technical, but the point really is that there are some distinct instabilities underneath the surface. That's what I really want to make there. If I may just spend a little time talking about the long term, and I say this because after pooling, this committee's responsibilities are going to be much more about setting the long-term strategic asset allocation. So I was going to go through a few known and unknown knowns and unknowns. You can make me familiar with the kind of the terminology here. Just known unknowns, i.e. things which are variable, we kind of know where they're going. Most important one is inflation. Short term may come down a bit. Some commentators think it will because energy prices are falling. I'm not sure I agree, but the real point is that in the longer term, what Western governments have been doing over the last 25, 30 years means almost inevitably inflation will be higher for longer. The second kind of known unknown is growth. I'm afraid it's going to be low. There's not much that any government can do about it. And the reason is that demographics are just going the wrong way. You can also look at things like tariffs and deglobalization, but demographics is the key point. Turning to unknown knowns, and this is kind of things which we know are going to change, don't quite know where they're going to go. First one I give is actually earnings growth. And that may sound strange because earnings growth has been quite strong over the last few quarters, but it's been driven very heavily by a small sector, so a small number of companies, the big tech companies. And one view is that they have monopolies. We all use Amazon, we all use Google, etc., and therefore they have pricing power and it will continue. The other view is that they're so big that somebody, US government, whoever, will take them down. I tend to favour the second, but I could be wrong on that one. Second one is the Fed chair. We know there's going to be a new Fed chair. We know he's going to be more amenable to pressure from politicians. We don't know how much more amenable. And it really does matter quite a lot whether he's prepared to stand up and try and fight for the kind of longer term growth or just give in to the politicians. I'd add China as another unknown known. China's chickens have come home to roost in the last few years. And the question really is whether they carry on down the same rather deflationary path as Japan, or whether they actually manage to return to their place as being the world's great producer and effectively a mercantile nation. I think Chinese growth will be lower than it has been for the last 20 years because they're so big, they're coming back to what you might call the rest of the world. The growth rates will be 2, 3, 4, 5% and not 5, 6, 7, 8%. I'd also just add the yen in Japan, and that may sound strange, but the yen is incredibly weak at the moment. And the reason is that much of the world has been using the yen as a financing currency. Bank of Japan is going to raise rates. Definitely, I mean, we'll raise rates once more this year and probably 2 or 3 times next year. If that precipitates a sudden turn in the yen, there's going to be instability because it's trying to unwind that carry trade is going to definitely cause some problems. And then we're down to unknown unknowns. I don't know what they are, but I'll give you my best bet is that it's going to be to do with politics. You know, who's going to follow Trump? Who's going to follow Putin? Who's going to follow Xi? And what's going to happen at the next election here? Yours is good. Yeah, what happens? I'm not going to try and predict that at all. But I think that those are the kind of things you need to look out for over the next kind of next 12 months or so.
Thank you, William. And I like the term known unknowns and unknown unknowns. And William's covered from the Fed, China to the yen. So we've looked at across global markets. Do elected members, pensioner reps and trade union reps have any questions for William based on the report? Thank you very much, Councillor James Rawson.
Thank you. Just a quick question. You mentioned that you thought demographics would help hold back growth. In what sense?
The basic underlying problem is that Western countries, and actually a lot of Eastern countries too, kind of Asian countries too, have got birth rates which are way below what's needed to sustain the population. And the problem then becomes you get more older people and fewer workers. And either taxes on working people have to go up, or the standard of living for older people have to go down, or, well, you won't like this, immigration has to go up. And you know, that is it. All those three, well, the first 2 of those 3 are negative for growth. The third one might not be.
Okay, thank you, William, and thank you, James. Got a question from Councillor Stuart Westwood. Over to you, Stuart.
Thank you, Chair. I think China's got a particular problem with that, although they're trying to hide it, aren't they? My question, it's not really to do with pensions, to be honest, but do you think as GDP growth becomes harder for Western countries and some Eastern countries, they're likely to start quoting growth figures in terms of growth per capita?
It's a very good point. I mean, I think quite possibly we may find that the emphasis we've had for the last 50, 60 years on GDP growth per se may change. You're right, GDP growth per capita would look a great deal more pleasant, wouldn't it?
Yes.
Thank you.
Okay, thank you, William. Thank you, Stuart. Question from Councillor Bingham.
Morning, William.
Morning.
Thank you for your presentation. Just a couple of questions. I was actually going to pick up on the demographics one as well. That's been covered. Thank you. And you've talked about the political chair of the Fed. One of the things that I'm looking at in here is money printing, monetary printing, money printing. It's been mentioned a couple of times, and talking about slowing inflation when that will stoke inflation, of course. So if that's a choice of the central banks, that's going to stoke more inflation. Which is already, it's already at a historically high level. There's a point at the bottom about using emotive language in threats and lashed out when we were referring to Trump, but that's a minor point. So the one thing was about money printing, certainly going to stoke inflation in my view. Net tax rise, there's some scepticism whether it would engender any real growth or solve the nation's long-term financial problems. I would say the answer is no to that. So it's just picking up on that comment, that's all. If you've got a different view, I'd love to hear it. Thank you.
Yeah.
Just add, so money printing, Councillor Bingham's referring to what's known as quantitative easing. Thank you. Just for those members of the public who are watching.
Starting off on monetary policy, over the last 30 years or so, the reaction of central banks to any major problem, and this goes right back to 1997, 98, the Russian crisis, the kind of Southeast Asian crisis, has basically been to, I say flood the world, but to kind of inject money into the financial system, because that means that companies who might otherwise find themselves in trouble have had enough, there's been enough cash around just so they can pay their bills day to day. Post the global financial crisis, that tendency became much more pronounced, and we had the term quantitative easing, which is really where banks are simply using their balance sheet rather than just printing money in the old-fashioned way. They're just expanding their balance sheet, and again, that means more money into the system. COVID, it happened at yet another level higher. The numbers grew much greater. Central banks have several times tried to kind of bring it back down again, and there's been some attempt in the last 12 months, 18 months to do it, but it hasn't, it's really been half-hearted because there are problems below the surface, as I alluded to. And what we had overnight with repo rates is really another sign that they're going back to quantitative easing. Why it matters for markets is that if you've got excess money, when money's in the system, it goes to the real economy first. And what goes to the financial system, i.e. bond markets, equity markets, etc., tends to be the excess. If you have more, you have greater excess. And certainly the framework I use to analyse what's going on, we've had excess for much of the last, certainly 15 years, and that's why basically markets have carried on rising. Does that help a little bit on the monetary side?
It does, but in QE terms, it does depend which assets are purchased basically by central banks. There is a school of thought that generally they've been high risk assets.
I mean, it started off by purchasing government bonds. And basically what happened was the Bank of England issued bonds, the Bank of England bought them back, and they then paid for that using very short-term finance. Different countries went to different places. In this country, we moved to corporate bonds, but not to equities. So they didn't try and buy up equities. In Japan, for example, they did use, the Bank of Japan bought up equities. Right now, the last 2 or 3 years, there's been a slightly different form of quantitative easing, where it's been more governments doing it rather than central banks. And what I mean by that is that the US Treasury has been financing they've been using very short-term debt to refinance bonds when they come up for refinancing. That has, I can spend hours on this one, I won't, but where we are, the main point is that we are still in an environment whereby there is very considerable quantitative easing. That broadly is good for financial risk assets.
Thank you, William. So it's been clear that we do our best to do future-proofing. I've got a question. I'm going to go over to Councillor Graham Chapman.
Thanks.
Obviously, William, you're always looking at the markets, news and things, and we've got a diverse portfolio. Do you feel that our current asset allocation remains appropriately positioned? Thank you.
I mean, yes, I do. We have a very diversified portfolio, and that's one of the best defences to an uncertain world. Because I may have a view, and I may be wrong, but if you have a range of assets, even if you get some things wrong, the portfolio, you will get something, you will find yourself too negative on some things, too positive on others. But diversification is the best kind of defence against uncertainty. And we have a very broadly diversified portfolio. I think the biggest risk for me at the moment, we are fairly mitigated against, is the fact that in the US, in the global index, over 70% is US equities, US dollar, and almost 30% of the global developed market index is in the top 10 companies. It's amazing. It's never been anywhere near that. That, to me, is the biggest concentration risk we have.
Okay. Thank you, William. Now, Councillor Graham Chapman. Graham's always insightful on some of his questions, particularly on markets. Over to you, Graham.
I'm so insightful, you finished my question. So.
Oh.
Okay. But I've got a variation on it. All right. That was a very insightful question.
Right, okay, right, what are yours?
Well, it would be, wouldn't it? Loads of dire warnings. We're going to have to look at our balance. Where are we going to have to look? Or are you not going to reveal until January?
So where are we going to have to?
Where are we going to have to look in our portfolio? Could you give us some hints, or are we going to have to wait till after Christmas? Because I love reading your stuff, but it always, apart from this one, says don't do anything.
Yeah, well,
Right.
I think long-term pension.
Now you're saying actually we might have to do something, so I'm quite interested in what are we supposed to be doing?
Yeah, I mean, long-term pension funds, it's always better to sit in your hands and do nothing. It's you should only really do something, if you're looking in the forward and have a very strong view that a big trend is going to change. And right now at the moment, in my view, as I've said many times, is that the biggest, really big risk is inflation in the long term. But we are already protected against that. So I'm afraid, Graham, I'm not going to recommend we do very much at the moment.
So it's do nothing again.
It's not quite do nothing, but it's it's nothing major.
Okay. But we won't be doing anything in January then.
Yeah.
Okay. Thank you, Graham. There's a lot going off in January. We've got our triennial valuation as well. So, has anybody else got any other questions for William? No. Okay. Right. So that report from William is for noting. So I'm just going to ask. Are we happy for William's report? We just have a show of hands on that one. Lovely, thank you very much, William. As ever, your contributions are always worthwhile, and we love you coming to the committee. Thank you. Right, so now we're on to agenda item number 8, which is the work programme. I'd like to move the recommendation that's set out on page 62 of your agenda pack, and as a reminder of that recommendation, that the committee considers whether any amendments are required to the work programme. And I'm going to hand over Tamsin Rabbits very shortly. I'm just going to ask for a seconder.
Second item, thank you, Chairman.
Thank you very much, Councillor Chowdhury. And now over to our investments manager, Tamsin Rabbits. Thank you.
Thank you, Chair. In the appendix, you can see the work programme for the rest of the committee meetings for the current cycle. The committee is asked to identify any additional reports required. Thank you, Chair.
Okay, thank you, Tamsin. So have we got any elected members, pensioner reps or trade unions? Have we got any questions for Tamsin on this item? Oh, yeah, question from Councillor Graham Chapman. All yours, Graham.
I've noticed over the last couple of meetings there's been a bit of appetite for a bit more focus on local investment. It's something I've always been keen on. People sort of very sceptical about. I'm just wondering whether we can't start looking at what we can do more, direct some of our funds to the local area, and whether that can't be part of the work programme.
Okay, over to you, Tamsin.
Perfect timing, Councillor Chapman, thank you. One of the elements that we're discussing at the working party in January is indeed local investment.
Yeah, it's a good question, Graham. We did go over on the coach tour to look at some of our assets, and I got really excited. I know a few other members did, particularly when I went into we've got a site near Bulwell, and we had 6 units there, and it was really worthwhile because we had a tour of one of the premises to see what they actually do, and you can see that we're providing jobs, we're providing employment, and we're near the road networks as well, so prime location. So yeah, I think there's a number of members here that are very interested in local investment going forward. Is that another question? Question from Councillor James Rawson. Thank you.
Thanks. Just to go on record, I appreciate everyone's views. I'm not too concerned about local investment. I'm concerned about investment performance, full stop. If Nottinghamshire investments give us great returns, who will them up? But if they don't, they've got to fight like everybody else. We've got to look after our pensions. Thanks.
Thank you, Councillor James Wilson. As always, we need our investments to make a good return. Got got another question? No?
Yeah, can I come back?
Yes, go on, Councillor Chapman. Thank you.
Just to put on record, I'm really interested in local investment.
Looked at it.
Yeah, okay, and I get my a tiny pension from this fund, carried interest. Right. I'm quite willing to sacrifice 5%, because it means local investment. But my main point is, let's not get just sucked into property as the opportunity, because there's also investment for startups and all sorts of other things. So it's not just property we're talking about. Okay.
Okay, thank you, Councillor Chapman, and also just highlighting it's not about just property, there's commercial stuff, there's startup businesses and other industries in the county. I think we've got a question from Councillor Stephen, struggling with your name today, Stephen Pearson. Thank you.
Just on the local investment front, I do understand what people say, and some of us went through a training event last week with LGPS, and that was a lively debate. The problem is, though, that lovely site that we saw at Centurion Park at Borwell was achieving a return or a yield of 1.5%. Compared to some of the other assets that we've got, that's not very good. So I think, we do have to balance the fiduciary duty towards our members with the desire to help the local economy. That's all I'd say.
Yeah. Okay, Stephen, good point. Have we got any other questions on that? Okay, no, lovely, thank you. Right, so that report was for noted. So we now move over to agenda item number 9. And agenda item number 9, everybody, is the fund valuation and performance. Tamsin Rabbits, again, will introduce that report. But before I do so, it's on your agenda pack, as it's on page 76 of your agenda pack, and the recommendation on page 76 is that the Nottinghamshire Pension Fund Committee notes the contents of the fund valuation and performance reports. And I'm going to ask for a seconder. Yeah.
Seconder, item number 9, Chairman. Thank you.
Okay, thank you, Councillor Baz Chowdhury. And now I'm going to hand over to Tamsin Rabbits. Thank you.
Thank you, Chair. This report is to inform the Nottinghamshire Pension Fund Committee of the value of the pension fund at the end of the latest quarter and provide information on the performance of the fund. The table in paragraph 3 shows the valuation at the end of September, at the end of June, and the value a year ago. The fund investments have increased by 320 million, which is 4.3% since the previous quarter. Paragraph 6 shows a more detailed analysis of valuations by portfolio, and paragraph 8 shows the income and expenditure for the first half of the year and the unaudited annual figures for 24-25. Paragraphs 9 to 20 relate to funds holding in fossil fuel companies and investments in sustainable equities and renewable energy. There are a number of caveats that need to be understood in interpreting this disclosure, which are explained in the report, and I refer members to these. Over time, it is anticipated that fossil fuels will decrease as a proportion of the fund, and that investment in sustainable equity and renewable energy will increase, but this long-term trend will not be smooth. At the end of June, we had an estimated investment of 136 million in fossil fuel companies, which is 1.7% of the fund, and sustainable and renewable energy investments amounting to just over £1 billion, or 14% of the fund. Members are reminded that a more thorough assessment of our exposure to fossil fuels through our equity investments is provided by LGPS Central's carbon risk analysis. The core index portfolio section reflects the equity market movements over the last quarter. These investments are now under pool management, as LGPS Central has an oversight arrangement for the illegal and general passive funds. Responsibility for voting on the holdings within these funds is transferred to LGPS Central. So our common strategy will apply equally to holdings in the core index. This arrangement came into effect in January 2025. The Schroders portfolio shows the regional analysis of holdings and purchases and sales during the period. The LGPS Central portfolio shows the investments made through the pool, and Aberdeen have continued to manage our property portfolio. The specialist portfolio section shows the composition and valuation of the specialist portfolio and transactions during the quarter. And the section on responsible investment activity summarises some of the responsible investment activity which has taken place during the quarter on behalf of the fund. Thank you, Chair.
Okay, thank you very much, Tamsin Rabbit. We do have an exempt appendix in this particular report as well, which we'll move to later when we've excluded members of the public. Do any members, pensioner reps and trade union reps have any questions for Tamsin on this one? Okay, right, so that report is just for noting. So we now move, right, no, half 11, we're on to number 10, which is exclusion of the public. Not crossing in. But I will just now move to that part of the agenda that proposes we meet in a closed session. So that means we're not going to be online anymore, and it's to consider the exempt information in agenda items 11 and 12. And I therefore invite the committee to resolve, I'll read this one out, that the public be excluded for the remainder of the meeting on the grounds that the discussions are likely to involve the disclosure of exempt information as described in Schedule 12A of the Local Government Act of 1972, and in the public interest in maintaining the exemption outweighs the public interest in disclosing the information. And I'm now going to ask for a seconder.
I second item number 10, Chairman. Thank you.
Thank you very much, Councillor Baz Chowdhury. Can I have a show of hands for the exclusion of the public? Lovely. That's unanimous, right? Okay, so I'm going to thank the members of the public who are online for their interest in today's December's Nottinghamshire Pension Fund Committee. Thank you very much for going online, logging and watching our video. And now I'm going to ask to pause and wait for any members of the public to leave, and none, and for the live stream to end as well. Thank you.